What's up, guys? William Ryan back with another video. And today I'm just going to be going over a couple of swing trades that I have placed and that I'm looking to unfold in the next coming months. Okay, heading into the latter end of this year. Okay, so heading into November, December, potentially even the new year, this is what I'm looking for price to do. And so we're going to start off with gold. So I'm expecting gold to trade down into the sell side liquidity pool. Okay, these equal lows are too clean. We also have a sell side liquidity pool resting here, right, with these equal lows. Okay, so I do think that the dollar, like I said in the video that I made maybe about a month ago now, I believe the dollar is going back up to 115. I don't think they're going to make the switch to a digital currency until they squeeze the most juice out of this lemon that they can. Okay, and so here I've entered a short position. Okay, and if you guys have been following along with the content, you know what my setup is. You know when I execute. Okay, you guys know when I'm getting in the market and when I'm getting out of the market. And so here we have our visual representation of price, right, in the candlesticks. So I have a balanced price range here, the fair value gap that we just traded up into. Okay, right? So that's the visual representation. The price aspect, okay, I went short at 1,880. Okay, so that's an institutional level. So I'm actually going to write all this stuff down, guys, for you guys. So first is the visual representation, so BPR, FVG, so real support and resistance. Okay, 2 is price, so we went short at 1880, right? Institutional level. Okay. And the last thing, right, is our timing element. Okay, so if you guys can see, at the bottom of the screen, right, the William percent R. So if you guys been following along, I use the William percent R as a timing element. Okay, and we can clearly see that we have SMT divergence. So we're making a higher high on the indicator, but we're failing to make a higher high. We're actually potentially making a lower high here on gold. So we have the visual representation of price. Okay, that comes in the form of these candlesticks. We have price, so we entered at a institutional level, so the 80 level. And then we have our timing element, okay, which is the William percent R. Okay, just another thing that I want to touch on before we head into the other swing trades that I've placed is the ranges. Okay, so here, right, the range that I entered in, look how many pips it is. It's 1,350 pips, roughly, give or take. Okay, 1,350 pips. And we know that when we're trading, we're looking for these levels to enter at. Okay, there's specific numbers in price that are very sensitive in forms of when our setup forms, when highs and lows form, and how much these pip ranges will be. So again, we enter at, or we look for these numbers in price. So 20, 35, 50, 65, and 80. Okay, so these numbers you're going to want to have in the back of your head. You're going to want to write them down and you're going to want to start using them, right? So we have 135 pip swing to the downside, right? Moving lower. We moved below a balanced price range. We broke structure. And on the higher time frame, on the macroeconomic analysis that I gave you guys, we know that we're bearish. Okay? That the market, we're anticipating the market to move lower. And so when we look at the retracement that we just had, how many pips do you guys think this retracement is going to be? If you just had to guess. Okay, so the range was 1,350 pips. Okay, think about it. If we're retracing, right, into a premium, we have to retrace over 50% of the range. So price is going to have to retrace, right? What are the likely numbers that price is going to retrace? What number of pips is price going to retrace? We have a 135 pip range, right? It's either going to be 650 pips, 800 pips, or 1,000 pips. That's how much we're going to retrace. It's either one of those three. Okay, and I just happened to get in when price retraced 800 pips. That's when I got in. So that's another element of price that you guys have to take into account, the ranges. Okay, the ranges are very, very important that we're looking at. Okay, very, very important. Like this range right here, 2,800 pips, 800 pips. You guys are going to notice that a lot. Okay, these ranges that form 1,800 pips. You guys are going to start noticing that. Okay, so again, this is one of the swing trades that I'm looking for. Okay, I'm looking for lower prices going into the next, let's say 2 to 3 months. Looking for lower prices for the sell side liquidity. The next swing trade that I'm looking at, okay, is the euro dollar, right? So I have the original position, right, that is on my YouTube channel. We explained it before it happened. It occurred. Okay, I added to that position today. So we have the Williams-Sonar characteristics, the same thing. So we have the timing element. Okay, we have the timing signature down here indicating time that this order block, okay, and fair value gap is going to get used by the banks. They're going to accumulate shorts here. Okay, the pricing element, okay, at the order block is 1.06300. Okay, so that's a big figure in and of itself. Okay, you can see on the right hand side, I think OBS can capture it, but 1.06300. Okay, and even right here we have a big figure as well, right? 1.06, big figure. Okay, it's very close to the point of entry. So again, guys, we have time. So we're going to do it the other way around now. Time. Okay, we have the Williams-Sonar signatures, okay? Right, that's for time. It's indicating that the banks are going to want to get in at this level at this time. Okay, so price. Okay, we got in at a big figure level. Okay, that 300 level. right? And if we look at these ranges, all right, guys, so we're going to take this high to this low, 300 pips. 300 pips was the range. Okay. If we're looking from this range high to this range low, and this range is 300 pips, how much are we going to have to retrace at least to enter position? Right? So we cut the range in half, right? We want to enter at a premium market. So we have a high and a low. Okay, halfway of 300, so just divide 300 by 2, right? I'll show you guys. Okay, so halfway is going to be approximately 150 pips, right? So you're just cutting the range in half, 150 pips, roughly, give or take. So we know that price is going to have to at least retrace 150 pips to get into a premium market for the banks to short. The banks typically don't like to short in a discount, okay, unless we're very, very bearish. Okay, so price, we retraced 200 pips. 200 pips. What are the levels that we look for, guys? 20 pips, 35 pips, 50 pips, 65 pips, 80 pips, 100 pips, and then so on and so forth. Okay, this range here from high to low, it's just shy of 500 pips. This range here from high to low is 800 pips. The ranges that unfold, guys, are going to be those numbers. And the highs and lows are going to form at those numbers. Okay, so the numbers and the price part is very, very important. And we must be aware of that element in price, because without it, right, you're gonna have a rough time. You have to have these ranges in your mind. You have to have these numbers in your mind and be aware of these numbers. Okay, so we have the timing element, the willing percent R, right? We're creating a higher high and we're overbought on the indicator, right? Add an order block, okay? And price, like a big figure level. And so we have this order block here. Okay, price came up, right? Took out the low, we came back up, hit the order block. We also have, same thing as gold, we have a balanced price range. Okay, so ICT would call this a reaper, but I don't subscribe to that. I just call this a balanced price range. It just acts as real support and resistance. The reaper is just a fancy way of saying resistance. Okay, so price came up into that. This reaper order block, right? We have the timing element. So the fair value gap in here, and this is essentially a breaker as well, mitigation. With this order block and this tiny little gap in here, okay, that is our visual representation. So that is price, like we went over, and time, the willing percent R signatures, overlapping. So when these two overlap, time and price, it's going to give you a visual representation, a fractal, to confirm what price levels and at what time the banks are going to accumulate orders. All right, so with that being said, we're going short on euro, looking for lower prices. Okay, on the weekly chart, go back to my other videos if you haven't seen them. You'll see the draw on liquidity that we're looking for on the weekly time frame. Okay, moving right along. So we've gone over euro, gold, and the next swing trade that I have on is the New Zealand dollar. Okay, so we have a very large sell side liquidity pool here. Okay, very, very similar to the other setups, right? We have a balanced price range. So this fair value gap here, it got traded through, extended out in time. We do not want to see price trade back above this balanced price range. Okay, or if it does that, and if we trade above it, then we're most likely going to be wrong in our analysis. Okay, but because I am bearish on foreign currency, I'm bullish on bonds, or the interest rates, so the bond yields. Okay, I'm bullish on dollar. We're looking for short positions on the macroeconomic scale as well as the micro time frames. So we have a fair value gap in here. Okay, balanced price range, fair value gap, highlighted by the box in here, the gray box. So prices come up into that, and now we're going to look for price to leave this balanced price range and start targeting the low down here. Okay, so we're going to hop into a daily chart on this. Actually, we're going to go into a 4-hour, and I don't touch on this, guys. Again, I'm not going to be going into SMT divergence on like in this mentorship. You guys can look at that on your own, right? So I'm just going to go over here the SMT divergence, okay, because it is a part of the setup, and I actually use this for confirmation in other asset classes. Okay, when I do my top-down analysis, my macroeconomic analysis, I'm always looking at other asset classes to confirm my bias within the macro scale of the markets, right? So this, which we're about to see, right, is SMT divergence, and actually really confirmed all of my setups, all of my short positions, right? This gave me a timing element. SMT also gives you a timing element. So I have SMT on NZD and AUD. Okay, so I'm going to go look for shorts in gold, in euro, whatever the case may be. I'm going to go look for my signatures in other asset classes. Okay, right? So here, I'll put on the daily dividers for you guys, or weekly dividers. So you guys can see that the week of September 26th, okay, we took out the high here. Okay, and we have the balanced price range. Okay, on the weekly, you guys can see that. Here's the balanced price range low. Here's the balanced price range high. Okay, we also have that weekly fair value gap. It's outlined, right? We just went over it. So when we see that on the 4-hour chart, okay, and we have SMT divergence, right? So when I go over to AUD, you're going to see that this high was failed or did not get taken out. We failed to come up here, right? And we have equal highs up here. This is indicating weakness. This is indicating weakness, and it's aiding in our macroeconomic short bias. Okay, so coming back over to NZD, right? We have a nice sell side liquidity pool down here, right? And that sell side liquidity pool on the weekly and monthly chart. So what I really want to see here, guys, to really confirm to me that my trade idea is going to be correct, and also it's going to confirm to me that I should be looking for opportunities on a lower time frame and that my macroeconomic idea is correct. We want to trade below and close below on an hourly basis and a 4-hour basis this fair value gap in here. So this gray box and this new week opening gap, we want to close below here. So if we can get a closure in the next 4 hours, in the next 2 4-hour candles, okay, if we can get a closure below these lows, or sorry, this fair value gap, that's going to aid very, very nicely in my analysis. And if price comes back up into this gap and this volume imbalance, the new week opening gap, I will then continue to look for shorts and look for pyramided positions to target the sell side liquidity resting below these equal lows. Okay, Very, very simple, guys. Very, very simple, right? So that SMT here, right, aided in my analysis and gave me confidence and confluence to go short in euro and in gold. Okay, so we're going to keep up to date with these trades. We're going to monitor them. We're going to go step by step with these trades. And if we do get confirmation on a lower time frame that this trade idea is correct, like this signature here that I'm looking for, I will go in, I will pyramid, I will day trade, and you guys will see, and I'll teach you how to pyramid positions from a higher time frame, macroeconomic, to a lower time frame. All right, guys, so that's going to be it for this video. I hope you guys have enjoyed this video. I hope you guys have learned something. And until next time, guys, good luck, good trading, God bless, and we will see you in the next video.